the fact that traditional risk off securities haven't worked this year, specifically bonds, right? Usually when stocks go to hell, then bonds are kind of the safe haven that everybody flocks to. Not this year. In fact, since November 2021, stocks and bonds have sold off in lockstep, which is unusual. And it's, obviously due to inflation and Fed and such. So what do you do to protect somebody who has bond and stock exposure? What does one do when the market's been selling off already and you're already down 30%, and you have to make a decision whether you want to protect against more downside, because you can't really justify taking on more risk, but at the same time, you don't know if things are going to go lower. So what does one do then?
Yeah. So that right there, what you said is it's like the beauty in a strategy like ours, because investors who have a tail risk hedge are able to take on more risk, right? Because they understand that it's almost like you have like a synthetic put, right? If you understand, okay, if I have that put to the downside, like, sure, I could max out the amount of equities that I could be buying now. And that's the value add in it, right? It's being able to buy assets extremely discounted when everybody else is selling, because you understand that, yeah, I have a hedge, I have a backstop, right? This is my backstop. And if things go wrong, great. I'm making a ton of money on my backstop that's going to offset the losses. And if things go right, well, I'm only losing a little bit of money on that backstop, but I'm making a ton of money on all the assets that I just purchased.
What does one do in an environment like this? So, like, are people still looking to hedge?
The interesting thing about the equity space is that vol is still giving you a chance to hedge, and if you believe that this is a bear market, historically bear markets end with large capitulations, right? That's like a historical fact, whether you want to toggle US equities to German equities, regardless, right? Like, bear markets end with capitulation. And if you believe that that is going to come, then, you're really in the band camp that a big volatility move is getting ready to happen. And this whole sort of slow train wreck that has happened this year has still allowed people to get in and hedge. So, as traditionally you wouldn't be able to get in and hedge, but there is still a chance to hedge your equity exposure. However, in like the whole FX and rates market, that's a little more challenging. If you have big exposure to the way how FX vols are moving, that would be a challenge. So I would say equities is probably the last ship that has not set sail yet.
Interesting. Wow. Despite all the drawdowns we've already seen. Wow. Okay.
Yes. Yeah. Absolutely. I mean, like, this isn't a view from us, right? It's an objective thing. When you look at how VIX and VIX vols are pricing, it's, you still have a chance to hedge the equity complex.